Hi everybody, this is Eddie. I'm going to do a quick market update for next week. This one's going to be quick because we'll be concentrating on just the SPX. So on Friday after Jackson Hole meeting, Fed meeting, the market tanked. All right. So whatever they say throughout the meeting, the people didn't like it. So what happened was I thought we were going to hold that this area right here, that 4100 area, because it was this huge support area, and it blew right through it. That's a huge negative sign for the markets. That's excessive selling. So on Friday, the internals were actually very weak. There was a lot of sell orders, big sell orders coming through, and usually I don't trade on Friday, so I did miss it. But I can only check the near around the close. So like we blew right through that big support zone, and we were now down almost close to 4,000. So 4,000 is the next big support zone, psychologically, and it's also the 50-day moving average. Now the real area that we're going to look at is this area right here. So if we blow through it, this is the next support right here. And then if this cannot hold, we're coming down to test the June lows. And then if it continues to be weak, we're looking at this area right here at pre-COVID high, which we talked about a few weeks ago. So this is, like I said, was a big megaphone type of pattern, and we got rejected right at the top of the megaphone, right at that 200-day moving average around the dot actually. And it start coming down. Now it's starting to look like it might play out. And if it does play out, we are coming down to test this area right here at pre-COVID lows. So next week, what I do want to see is for it to hold 4,000. If 4,000 does not hold, I would get rid of your long positions. If you do want to hold on to them, you can hedge them, or you can play the short side, right? Until we break back above this level, this 4,100 level right here. On Monday, if we actually open, we come all the way back up and we hold above this 4,100, there still could be a chance that we're just going to consolidate and then find a direction, right? If we open, we come back and we retest this and get rejected, be very careful, because if we get retested and come back down, expect us to go down to around that 3,900 area, right? As long as we are be able to hold above this June low, we're still okay. Because it could come down right here, hover around, and then we can trend back up and then retest this 200 and break through it, right? So that's our best case scenario, is to have it to just consolidate, find support, consolidate, create a higher low, and then go higher, right? Worst case scenario is we actually break down and then we go all the way back down to pre-COVID lows, and hopefully this is the area it holds. Because if you look through the volume shelf, majority of the volume is actually in this zone right here, right? So unless we have a big expecting a big recession, I don't think we're going to go down to like lower than 3,000. So this is a very key area to hold, is right at this COVID high right here. Right. So the plan right now is, for me, I have my stops in for my long positions. I actually got in long position that day, not noticing the internals because I was kind of busy and I just wanted to get like a position in, thinking that this will hold. So it was a very small position. Like I'm still majority cash. I probably just deploy about 10% of my cash, and then just to get a feel of the market. But anyways, I'm pretty sure those will get stopped out on Monday. So if that's the case, then if you get stopped out, go cash, start finding short position opportunities until we get back up above 4,100, right? So if we do continue down, I mean there's a trade there. So I don't usually play the short side that much. I do trade it intraday. So if I am going short, I'm just going to short intraday. So I'm still doing majority of my trading through day trading, and only very small on swing trading positions. So last week there were some plays that we played like on this consolidation break to up towards the 200, and then once it got to 200, we pretty well just waited it out to see if we find some support. So when we found support around right here, I got back into some long positions, but Friday just kind of wiped everything out. I did have a really long watch list of stocks that I was going to buy, but Friday pretty well destroyed 90% of those setups. So, this is why you had to wait for stocks to go, for the index to go above 200 to really deploy a lot of money. Because if it doesn't go above 200, we're still in bear territory. And this would be the upper range of bear territory, so that they could short this, and it could be a long way down. That's why you only want to deploy a lot of money after we stay above the 200. All right. And like there's really no point to look at the other indexes because the chart's very similar. If you look at other stocks, they're all broken. On Friday, it kind of broke everything. So, when you have days like this, there's really not much you can do other than get out of your long positions and then wait for it to find some support, right? For all you brave people that likes to short, this is a pretty good short opportunity on a bounce. So if we make a dead cat bounce, say around this level right here, this 4,100, that's your entry to go on the short side. And your target would be, if you bounce up here, your target would be the 50-day moving average. And then if that's broken, this is it, right? So that's the way to play it. Anyway, that's pretty much it. In this environment, you guys, concentrate on risk management, because if you're going to trade anything in this volatile environment, you really need to have a plan, know where to take your stops, know when to take your profits. I tend to take my profits earlier in environments like this, and I keep my stops pretty tight. So it doesn't matter if you miss a trade, because the most important thing is keep your capital, right? Keep your capital around when markets are choppy like this, and then deploy that capital when there's a defined direction to go with, right? And usually you make more money playing the bull side if you're going to on a long position, because on the short side, they tend to be violent, volatile, and there's a lot of traps as well. So it's harder to trade the short side. But it's a personal preference thing. I prefer playing the bull side. So if you're really good at playing the bear side, then go for it, right? The important thing is just keep your risk management tight. Keep your position sizing small until we get better conditions to trade with. All right. Anyways, and if you guys want to learn how to day trade, I do have a live course coming up in September. We did sell out of this course in the beta in February. So if you missed the beta and you want to learn how to day trade and how to cash flow in this environment, then please come join our day trading course in September. Links in the description below. And, day trading is something that the skill that you learn from day trading, you can pretty well apply it to all your trading. So the stuff you learn in day trading is majority of its risk control, right? So if you're able to master your risk control, you can master your skills in all type of trading, can make a lot of money in the long run, right? So anyways, gotta go. Peace out.